So, UK Prime Minister Rishi Sunak has called a general election. This is just one of around 65 elections that are taking place in 2024, the most attention grabbing being the US election in November. With an election comes big changes both before and after the event. So, what does this mean for gold? Do previous elections indicate that this year will be a good year to own gold or not? And what can we expect for the price? Let's find out. So here we are. We are nearly halfway through 2024. This is the election year, and it's also turning out to be the year for gold and silver. Is it correlation or causation? Now, there are 6 key ways an election can affect the price of gold. First up is through uncertainty and risk aversion. We see uncertainty increase both before and after an election. When we see pre-election uncertainty, there is often increased uncertainty about future economic policies, regulatory changes, and political stability. And this uncertainty can drive investors to seek safe haven assets like gold, pushing up its price. And following on from the election, we see post-election uncertainty. This means that in stable economies, this can have a very low impact, as generally things will tick along as normal in the immediate aftermath. However, especially if the results are contested or if there is a major shift in the policy direction, uncertainty can remain high. And this can continue to support higher gold prices. Second up, policy expectations. If you're in a country that has an upcoming general election, then the truth is you're probably not only pretty bored of all the post-election policy promises, but you're probably also pretty bored of trying to work out which of them is even remotely slightly realistic. There are a number of policies that elections are run on. Health, family, education all tend to pull on the heartstrings of voters. But ultimately, what it all comes down to is the policies of monetary and fiscal. So monetary policy. Elections can lead to changes in monetary policy, particularly if a new government has different views on interest rates and inflation management. For example, if a newly elected government is expected to support low interest rates and higher spending, then this could lead to concerns about inflation, which typically, as we are seeing, boost gold prices, as gold is seen as a hedge against inflation. Right now, this is a seriously hot topic, probably the hottest it's been in my lifetime, certainly. And we already know Trump's own views on the US Fed Chair Jerome Powell, who he sees as too hawkish. He said, and I quote, "We have a gentleman that likes raising interest rates in the Fed. We have a gentleman that loves quantitative tightening in the Fed. And we have a gentleman that likes a very strong dollar in the Fed." Now, fiscal policy. Similarly, expectations of increased government spending or tax cuts can lead to high deficits and debt, which might weaken the currency and increase gold demand, although currently this isn't entirely how it's playing out with the US dollar. Now, third on my list is geopolitical considerations and thinking about domestic and international stability. Elections can alter geopolitical dynamics. A more isolationist or a more aggressive foreign policy stance might increase geopolitical risk, leading to higher gold prices as investors seek safety. And just think about where we are right now in terms of risk, and that going up a notch. Interesting research from the World Gold Council finds that geopolitical risk significantly impacts gold prices. And this isn't just through an investment perspective. For example, last year in 2023, gold holders in both the Middle East and Europe were particularly reluctant to sell their gold despite the high prices and economic distress. The World Gold Council estimated that recycling decreased by 30 to 70 tons in 2023 because people wanted to hold on to their gold. So therefore, geopolitical risk is broadly influential, and it prompts us to closely monitor the upcoming elections to understand what the effect is going to be on gold. Now, let's think about trade policies. Changes in trade policies, such as tariffs or trade agreements, can affect global economic stability and growth prospects. And when we think about protectionist policies, for example, this is likely to slow global trade and slow down economic growth. And this increases the appeal of gold. So look out for so many more of these, regardless of who wins the US election, as tensions are rising across the globe and everyone wants to bunker down and protect themselves. Now, number 4, market sentiment. And let's think about investor behavior here. Elections can influence market sentiment and investor behavior big time. Positive sentiment towards a pro-business candidate might reduce demand for gold as investors flock to equities. Now, concerns about a candidate's economic policies could have the opposite effect. But one thing to note, though, in regard to the US election, the risk to market sentiment and investor behavior stems from policy changes that could disrupt current trends. And these changes might include higher taxes, restrictive trade policies, or spending cuts, which could negatively impact financial markets in the short term. And as a result, markets often make adjustments before the November elections. Now, if you look at election years since 1960, it shows that markets generally rise during these years. But it's important to note that the market typically corrects in September and October, which could make it good news for gold. Now, safe haven demand. Political instability or concerns about the effectiveness of a new government can drive investors towards safe haven assets, including gold. And that brings me to number 5, which we look at currency movements. Think about exchange rates. Election outcomes can impact currency values. A weaker domestic currency, for example, makes gold cheaper for foreign investors, potentially increasing its demand and its price. And conversely, a stronger currency might reduce gold prices in domestic terms. And it's worth mentioning here that President Trump has been very vocal about the dangers of the strong US dollar. As he said a few years ago, I want a dollar that's great for our country, but not a dollar that's prohibitive to us to be doing business with other countries. And finally, brings me to number 6, gold's old friend, inflation and inflation expectations. Generally, governments in the run-up to an election can increase spending as they try to buoy up voter confidence, and then expectations of higher government spending and increasing debt levels also follow an election. And so this can raise concerns about future inflation. Good for gold. But right now we have an even bigger reason to be concerned about government spending and inflation levels. And regardless of who wins the election in the US, UK, and EU countries, you should expect to see higher inflation. The Fed especially is going to struggle to contain it. Their projections just don't line up. And all of the favorable global factors that have helped them to hold down inflation just aren't there anymore. This is all good for those of us who have chosen to hold gold and inflation hedge. Now, here's a bonus for you. What have we seen in terms of price in the previous elections? Well, research from the economist Peter Schiff has found that since 1980, the period of January to September in the run-up to elections, gold prices have typically risen. And we're seeing that right now. Now, this can be explained by the relationship perhaps between the incumbent president and the Fed due to the incumbent's desire for looser monetary policy to create an illusion of economic prosperity. Now, obviously, we're in a slightly different scenario right now. But generally, the Fed chairs, knowing that they're more likely to be replaced if the opposing party wins, as is likely to happen with Trump, they have an incentive to cooperate. And after the elections, as the market absorbs the news, then gold prices do have a tendency to decline somewhat. Now, since 1980, in a very small majority of instances, gold prices have decreased in the 2 weeks following the election. However, in 5 out of 11 elections, gold prices actually rose, ranging from a 0.1% increase to a 3% rise. Between election day and inauguration, there is a more definitive downward trend in gold prices. In 9 out of 11 elections that were studied since 1980, gold prices have fallen by anywhere from 0.1% to 12.3%. But the exception here was in 2008, when gold prices rose due to the global financial crisis rather than the election itself. So again, don't look at everything in a vacuum, look at what else is going on. So one does wonder how well the Fed and other financial institutions will keep a cap on the next financial crisis. If they continue to succeed in the short run, then it sounds like the time immediately after the election could be a good time to add to your gold position. But overall, now is just generally a great time to hold gold. In summary, elections do affect gold prices through the interplay of uncertainty, the policy expectations, the market sentiment, geopolitical considerations, the currency movements, and don't forget inflation expectations and the upcoming reality of inflation. The specific impact of any of these elections will obviously depend on the political and economic context at the time. But overall, what we see is very, very positive to gold. And so with that, why not click on one of these videos to learn even more about this amazing metal?